Hang on. Are we not getting, let me see if we're getting sound here on the, give me 1 second here. All right, how about now? We're getting some decent sound? Should be good. All right, cool. All right, good. Hey, you didn't miss anything. I'm just talking about I'm just listing the ideas that we're going to cover. So yeah, if you're in the live, yeah, sorry about that. Yeah, we should be good. So all I was doing is sort of putting the agenda out there on the notes. So you're good. You're good, gang. You're good. Okay. So yeah, you guys didn't miss a thing. Don't worry about it. You didn't miss a thing. All right. Okay. So let's get on over to. So by the way, all right, those of you that are catching up on the notes here, we have some sector ideas. I am very curious about software versus semiconductors. I would definitely recommend making sure you guys have a free account with Koifin because we are going to get into some sector conversations. VIX action, it needs to settle down, and I do emphasis to settling down. It does need to settle down for the markets to find support and continue. All right, continue on, generally speaking, the uptrends. We'll talk about lumber. Was it a warning? Is it an unwind of the reflation trade, etc.? Some of the sectors that I have in focus, and also the index sync with stocks and the sector sync with stocks. All right, so let's get to it, shall we? All right, now, ultimately, what I want to make sure is that we have our agenda set. For the first hour, from about 9:30 to 10:30, we're going to focus on just looking at intraday setups. It might be on the futures, S&P, NASDAQ, Dow, Russell, and then we'll play the ETF alternative. So we'll talk a little bit about some options day trading this morning. And then I'll also take a look at some of the stocks as well, both long and short term. So you guys are getting like just a deep dive on what I like to do the first hour of the day, where the emphasis is usually day trading, but it doesn't have to be. All right. This is not a super active style of day trading. I don't believe that is long-term productive or sustainable. It will make your broker rich, but it probably won't do you any favors. So we're going to focus on the 5 pitches that I look for in day trading. All right, the 5 pitches of day trading. All right. And that is going to start off with what I call V-score lows, which is a volume-derived low, HPMR lows, which is a volatility-derived low. We'll wait for some more classic setups based upon the clearing range. So these would be clearing range breaches, okay? What I call a breach retreat. You could also get a breach retest if it happens. I'll walk you through it. We can look possibly at some 34 EMA wave intraday trends. And then finally, that'll take us to the last setup of the morning, which is, do we have any initial balance breaches? Boy, would I love to see an initial balance breach to the upside today to get this market back on track. We'll see what happens. All right, a few things that I know a lot of you have asked me about. I've got a lot of emails about this already, which is about Netflix. Gang, I have no exposure to Netflix because it simply did not allow me an entry before earnings. And that entry before earnings stems from whether or not I have a double green, in other words, an uptrend that I have basically identified and qualified by moving averages. I did not have it Netflix has not been in a trend, gang, since last September. So this simply won't be on my radar. So it's not that there is a good or bad setup here. I have no idea because none of the criteria that I need are available to me here. Okay. Another question that I've been getting a lot of is surrounding the NASDAQ. Gang, of all the indices, it's actually the Dow and the S&P that are in the best quality trends. Overall, on the daily, it is the Dow and the S&P that have the best quality trends. Now, I do think yesterday's pullback to a very fresh confirmation of 13 period exponential moving average is pretty decent. And I think it also, when I talk about a 13 period exponential moving average pullback, let's also remember that that is a very shallow retracement. So, our tolerance collectively for pullbacks within the context of a trend is usually very low. Retail traders' tolerance for a pullback is also very low. Netflix is not going to do the NAS any favors, but the NAS is more heavily weighted based on Apple, Microsoft, Amazon, Facebook, Google, Tesla. All right. So if those 5, 6 can find their way higher, it really won't be as big a deal, or we can overcome what's happening in Netflix. But the market made a correction, and a pretty shallow one at that, to the 13 EMA. All right, to the 13 EMA. Now, my concern right now about this market, and if there's anything that's probably hurting, is the fact that there does seem to be the market turning away from the reflation trade, meaning some of the stocks that have benefited from this overall increase in inflation are really struggling. You can see crude's down again after breaking out. Crude's down again. That is not going to help oil stocks. All right. Another market that rolled over recently was lumber. I won't say rolled over. Let me show you a chart of lumber. And why lumber? Is lumber something I'm going to talk about all the time? No, but in terms of looking at lumber and what it has been doing, see that move in lumber? That's pretty interesting. That's pretty dramatic. I'm not saying it was a precursor to the unwind in stocks, but it is going to potentially be a precursor to maybe more weakness in the reflation trade. And I've got to be really, really aware of that, because the reflation trade has been very good to me, to many of us, for a long period of time. And suddenly I would suppose, and this is a very arbitrary thing, but it remains crowded, I guess, enough where there's not as much enthusiasm about the continuation at the moment. Why? Probably because we're seeing so much strength in tech. If there's an enemy to the reflation trade right now, it's probably the surge that we have seen in April in tech. Why do you say that? Well, why would I say that? Because for about as long as, say, XLE or OIH have been sort of choppy or weak, it pretty much has been about as long as tech has taken back off. And so some people will say reflation is crowded. Look, gang, there are crowded trades that continue for a while. So crowded is not immediately this reason to stop trading a certain macroeconomic narrative. But competition, taking attention away from, is. So when tech starts moving, I think right now we're seeing an inverse or negative correlation between tech and that reflation trade. Now, it's not wide, because one of the things that we've done both in the futures room and in the sector secrets is we've remained long corn, whether that's the ZC futures or the CORN ETF. That's continued beautifully. And just the other day in the free video for futures, I talked about, hey, we need to get back on this soybean conversation. And that conversation was happening back in here. We need to start looking at soybeans again. All right. So yeah, I think there's a couple issues that we're running into as we wind down April. Let's be aware of the issues. Reflation trade is not the flavor of the month because QQQ NQ Tech is. So there's a definitely a relationship there. Okay. The other one is the sync conversation that I was talking about in the charts and coffee. And what that means is index sector sync pullback timing. We have had individual stocks correct good quality uptrends. All right, good quality uptrends without the sector or index pulling back. Now, that is not a reason to not take the trade, but what happens is when the stock, let's call it goes first, right? Pulls back without the sector, without the index, okay? Then if the index or sector pulls back again after, stock usually will not hold the 34 EMA wave or whatever support we were looking at. So I'm not saying that you have to have synchronicity between the index and the sectors, but I do want you guys aware of what happens when we don't. All right. And we'll talk more about that here today as well. So we're going to talk about multiple markets. We're going to talk about indices. We're going to talk about futures. We're going to talk about stocks. That's the way I look at the market. So if you guys are looking for a very compartmentalized conversation, we're going to talk about a lot of topics. We're going to look for trades across multiple markets. All right. So if you're not used to that, just buckle up. I think you're going to find a lot of benefit to a much more, well, quite frankly, holistic look at the markets. In other words, are there things you can learn by understanding what's happening with currencies and commodities and futures relating back to stocks? Yeah, gang. When I look at the longevity of my career, 30 plus years, it's not because I have a magic indicator or a magic strategy. I wish, right? Or a crystal ball. It's because I'm fluent and fluid in multiple asset classes and in multiple time frames. And that's what I really want for you guys as well. Okay? That's what I really, really, really want you guys to be able to benefit from. All right? Okay, excellent. So let's see. I want to go through some setups here. Do notice something right off the bat. Let's talk a little bit short term here. I do want you to notice a few things right off the bat. First thing we look for when we're looking at the markets in the morning are whether or not we're getting a gap. Dow, I would not call today's open a gap open. S&P, I would not call today's open a gap open. The NASDAQ, is today a gap? Gosh, barely. Okay. And then finally, the Russell is today a gap. No, it's actually 3 out of 4 of these markets are plotting what's known as an inside day or an inside candle, where the current range, the current candle, is trading inside the candle that came before it. That's all. All right, so let's see what we've got here. The markets have been open for 12 whole minutes. And what I'm going to look for again first are whether or not we have any kind of early morning setup. And I think the only 2 that are catching my eye at the moment, and anything done before 10 a.m., gang, has to be considered aggressive. So any day trade we enter before 10 a.m., and I'll tell you exactly why that is in a moment, but any day trade we enter before 10 a.m. is aggro. and should ideally be done with options, micros, or smaller position size. Now, a few things caught my eye. They were a little aggro, but a few things caught my eye right off the bat. This particular indicator on the very bottom is an overlap of a tool that I created for myself 12, 13 years ago called the V-score. It's simply a Z-score of the volume weighted average price. In other words, I looked at the volume weighted average price and wanted to find the standard deviations. That's all. And it sounds a whole lot fancier than it is, but it's just a really simple tool. Some of you might pull standard deviations on moving averages. I'll tell you guys a little known secret. I actually don't know that I've talked a lot about this. My very first iteration of the 34 EMA wave was a standard deviation measurement of the 34 period exponential moving average on the close. It was actually a standard deviation study. The first time. I don't know that I've ever really talked a lot about that, but so the first wave, sort of the prototype, if you will, was the standard deviation of the 34 period exponential moving average on the close. And I'm actually might have even been this simple now that I think about it, but I was looking at standard deviations. So that's definitely something you will find in the markets. Another popular tool here at Simpler is standard deviations of the average true range. So you can pull a standard deviation Z-score on darn near anything. I just happened to have pulled it on a volume weighted average price because I wanted a volume derived tool, a tool that was not looking at price per se, but size. Okay. So when we can get down to, let me grab my drawing tool here. When I can start trading down to, and we might revisit this, who knows, but I could start trading down to that white line, preferably touching that. I'm talking about right down in here. Okay. If I can touch that white line, then I have the market hitting an extreme. The extreme is an extreme of the volume weighted average price. Now, we did hit the extreme of volatility, but we had not hit the extreme of the volume. So that wasn't quite in sync, but these are both kind of a long from lower, right? Long from lower psychology. In other words, please don't, whatever you do, as we're sinking into a level like this, or as we're closing in on a level like this, please don't short. Momentum traders love to look at an up or down candle that's moving swiftly lower and short. Please don't do that. If we're reaching this volatility support level or the volume support level, either look for a way that you can control risk on a long, but please don't short. In fact, if anything, before you decide what you're going to do, identify what you're not going to do. Take decisions away, don't add, right? That's going to give you paralysis of analysis. If you can do anything, whittle away from decisions, don't add to, well, I could do this or this or this. No. Find out what you're allowed to do till you're down to just one decision. All right, so let's take the same setup on the NQ. Very early, just a little bit after the bell. That's actually not a bad setup right there. Notice that this one touched it. It's aggressive because it's happening before 10, but that is a V-score low setup. That is a V-score low right there. And you can see what's happened. So again, eliminate from contention what you can do. Don't short, right? Just whatever you do, don't prioritize the short. Okay. All right. Let me and gang, if you're in either room, I'm gonna check back on the questions. Let's get through the morning. Those of you that are in SSM, my mastery folks, that's what we're talking about. I know a lot of you have this indicator, my V-score indicator. That's what we're talking about. This is a 1 minute time frame. And we're looking at, so for those of you that want to say, Rag, how do we know what that low is? Anchor the V-score to 7 a.m. Eastern. Anchor the V-score to 7 a.m. Eastern, and then look for the lowest low since between 7 and 9:30, and the high. That's what you're looking for, the low and high between 7 and 9:30. All right? And then when we hit that low, and we're yellow like this is very important. So what would be the checklist for something like this? What would be a good checklist for a V-score? Let me put the checklist here. All right, so a V-score day trade. Put a checklist here. You want to mark, and the emphasis is on the low. Mark the high and low, or I should say the highest, right? The highest and lowest reading since, or between, not since, between 7 and 9:30 a.m. Eastern. If the JT trend is green, it usually won't be green, or yellow, and the V-score low is reached, it's a buy. Now, here's a great thing. If the HPMR is also reached at the same or similar time, it is really one of my favorites. It is what I call a garden lady low. That's a great buying opportunity. That means we're getting that. So what's the garden lady low? It's both volatility, all right? Both volatility and volume support. I want to call it exhaustion because that might be a little confusing. It's both volume and volatility support. So both those things are happening at the same time. All right. So this market is looking like it, look, I thought yesterday we would have done something more like this, kind of give us a nice turnaround Tuesday, but I'll take a turnaround Wednesday. That's okay. I'll take a turnaround Wednesday. That suits me just fine. I don't have a problem with that. It's still in the clearing though, gang. Remember, 9:30 to 10 o'clock is the clearing range, All right. Keep that in mind. All right. Next up is, just bear with me, gang. I will get around to the questions. I just want to keep my eyes on the charts because what I see here could turn into ideas for us. Does V-score work on Forex? Joe, it does not. Yeah, V-score does not work on Forex. Is V-score available on other platforms? Lewis, I created V-score for myself in 2008. Like I said, it's a Z-score on the VWAP. It is an indicator available through Simpler Trading. Correct. Yeah, this is something I did. So just a little background. The V-score was something I developed back in 2008 when I had gone, for the most part, in 3 of my 5 portfolios, I had gone to cash when certain levels were broken, volume and trend during the 08. Right, you guys know what happened in 08. Like a lot of us, I went into cash. I'll never do that again. I think that was a huge tactical error for my portfolio management. 3 out of 5 went to cash. And what I did to rebuild my portfolio is I figured, how can I coattail institutions moving back into the markets? Or how can I coattail the size moving back into the market? And I thought, well, it's not price that's going to determine that for me. That's going to decode and reveal that for me. It's going to be volume. And that's where I'd say 08 is really where my love affair with volume as a tool that would really be darn near as important to me as price really started to emerge. Okay. All right. So it is a premium tool available through Simpler. And again, it's the volume weighted average price of the Z-score. Next up is, let's see. So NAS, I would say that was, those of you that have taken my ultimate day trading class are probably very familiar with that setup right there. It was very quick, really quick, but that is a buy setup. That's a V-score buy setup. We could probably say the Russell got very close. I just want to at least show you what these setups look like. We still have more to come, so I'm hoping we could fire off some trades here. The Russell got really close to the HPMR plus the V-score. By the way, these HPMRs are constantly moving. So the way that it looked a few moments ago before we started plotting higher highs, all right, was in this area. if you recall. So it got really close, but not a perfect Garden Lady low, but really close to that V-score low. So I want to see the V-score low and the HPMR. If you say, Rog, is there one more important than the other? I probably personally put more importance on the V-score because it's volume. It's actually size. And volume could be seen as that opinion, that conviction, that commitment, right? It's that commitment that I think we can really fish out when we look at the V-score. So when I talk about yellow or green, am I referring to the JT multi-trend being double yellow or double green? So, right, let's clarify that for anyone who's not sure about what that means. Sure. All right. So along the bottom here, gang, there's 2 rows, 1, 2 of colors. And these colors go red and green and yellow. All right. So these 2 rows down at the bottom. The first row is the 8, 13, 21, or the upper row. The lower row is the 34. The one that I talk about that has to be at least yellow or green is the lower row. So I really should say if the JT trend lower row, which is your 34 EMA row, okay, that's the one that we're talking about. And thank you for asking that, JRZ, because that is very important. I'm not as concerned about the upper row. I'm much more concerned about the lower row in terms of the validity of the trend, That lower row is more of a trend conversation, okay? That's a trend conversation. So a couple of questions about some lingo questions, and that is, what is clearing range? Clearing range is just the first 30 minutes after the bell. That's it. And you're going to get a range during this time that could be useful later on in the morning. So it's the 30 minutes after the bell rings. So it's 9:30 to 10. 9:30 to 10 a.m. Eastern. Okay. Now, those of you that are more self-directed and know my work, you probably saw that V-score. Again, what I really pride myself on is having indicators that you don't have to manually do anything to. Really important. You don't have to manually do anything to these indicators. You just have to read them. You just have to interpret what they're telling you. There's nothing you're going to have to draw. There's nothing you're going to have to calculate. You just read what this dashboard, if you will, is communicating to you. Now, in terms of sector secrets, gang, I mean, this is definitely sort of the movement that I was anticipating yesterday. Clearly, it did not go that way yesterday, but it's nice to see things sort of coming back in the overall direction of the market. And please remember, when you look at the daily time frame of many of these markets, these are very, very shallow corrections. Couple markets that I do have in my sights, and I'm going to continue to look for any day trading opportunities, but let's take a quick pit stop at some of the stocks and sectors that I've had my eye on. Caterpillar, transports, industrials, Dow. CAT's really been on my radar. And you might wonder, well, Rog, why aren't we looking at CAT? Earnings are right around the corner again. And I don't know that we're going to be able to we got the dip, right? We got the dip. We got the pullback. The problem is I need CAT to rally before the 29th so that we can scale out of that trade or just flat out get out. So it's not that I don't like the setup, but with just a handful of trading days and only 8 calendar days, I don't know that we have enough time to see the follow through that we need. And that's always going to be something within 2 weeks of earnings. I will oftentimes say thanks, but no thanks to a setup. All right. All right. So, yeah, it's good to see the market sort of get back on track. But here's the thing, gang, getting back on track is not getting so concerned with, again, the NAS, which really isn't all that trending, gang, and paying more attention to markets that are trending like the Dow and the S&P and the sectors within those markets that are so strong. Okay. Yeah, it does help us if tech is strong. No doubt. Why? because the one thing that the three major averages have in common is a disproportionate weighting in tech. So in many ways, the NASDAQ moving higher is very helpful. Now, I will also say crude oil has come back on in a big way this morning. So can tech and the reflation trade coexist? That's a big question, gang. I don't know that we've seen convincingly that, well, let me put it this way. I think once tech got out of its trough and started moving higher, we definitely saw attention go away from the reflation trade, away from some of those oil stocks and commodity-driven stocks, and even the commodities. But I think now that the tech move is a little bit more established, yeah, hopefully these two trades can coexist again, which would be very helpful because clearly I have exposure. You guys know this. We have exposure to these markets. A couple other things. Let's talk about tech for a moment and get a little bit more granular. Semiconductors. I don't have exposure to semis, but this is looking interesting. I wish it was a double green. It only went yellow. Semis could be very interesting for us here, gang. I like the inside day. It's probably not going to give us the same pricing benefit of buying a call in the down day like yesterday. But when markets are sort of in meltdown mode and all the news is bad, and that's the way these things go, dips never happen with good news, gang. Today might be interesting to look at some semiconductor, either ETF options or some individual stocks within semis. But we do have exposure to CLOU, or cloud computing. So it's good to see that sort of regain some of its footing. Things like Box, things like Dropbox. Again, it's good to see them regain some of their footing. It may be a slightly arduous trip back to the upside, but I think that's there. Another market, retail, XRT. All right, this is one that we talked about in the Sector Secrets Mastery. Looking at XRT. Some of you might have decided to get aggro here, and you know, I don't have a problem with that. But I still think we have a pretty good opportunity for possibly some XRT. One of the problems and some of the lethargy we're seeing in XRT is coming from the opinion that the vaccine and stimulus rally, which has mostly benefited XRT, is played out. There is that opinion running around that there seems to be this notion that the vaccine and the stimulus check rally, that strength, that optimism is sort of sputtering out. But again, I don't really see a larger problem in the markets. I really don't. There was a neat article that I was reading the other day. And I know this has been pretty typical, but you know, what do banks, let me give you guys this, all right? What do banks, meaning your institutions, your JP Morgan types, all right? What do banks look at? Again, generally, I'm not privy to that. Nobody really is. They'll tell us what they want to tell us, but what do they generally look at to remain bullish? And this has been, you know, just some general things that I think they will refer to, all right? They want to see the ISM above 50. Well, everybody does, so that's a basic one. They want to see, we're in earnings season, they want to see earnings per share beat and actually revise and guide higher. Well, that's pretty easy. They want to see earnings guide higher. Share buyback, sure don't hurt that. Here's an important one. And this is one that I believe is very important. And I think that banks like this too. Commodities are bullish. That would be definitely part of the reflation trade, but it's not just reflation. It's not just reflation. When copper, crude oil, our grocery store commodities, the commodities that we need to build things, the commodities that are in demand in what? Economies that are expanding and optimistic. Commodities being bullish is a pretty big deal. What's also very helpful, I think relatedly, not always, but relatedly, especially in this environment, US dollar is weak. You guys know we've had a heck of a move in the dollar index. not all that long ago. And so the dollar index heading back down, really important, really important. Okay. Dollar index heading back down after that little rally, super important. So US dollar weakness, I think, is really not only attached to the narrative of bullish commodities, but that's super helpful. You guys know in the Sector Secrets, one of the ways that I'm playing that narrative about dollar weakness is we like Canadian dollar specifically, and we also like Canada specifically. Okay? We like Canadian dollar and we like Canada. So we had a interesting little EWC trade that we looked at yesterday. Because when the dollar's weak and commodities are strong, who is going to be disproportionately benefiting from that? COMDOLs, commodity-driven economies, Australia, Canada, and New Zealand. But right now, Australia and New Zealand are sort of on the back burner. Canada's on the front burner. Why? What are their two most popular imports? Two of the ones that people track. Energies, hello, crude oil, and lumber. I mean, lumber's been in fuego. What else do we want to see? 10-year bonds trending higher. The 10-year specifically. Preferably preferably the shorter end of the yield curve, which I would not consider the 10-year the shorter end of the yield curve. All right. So if 10-year bond yields are higher, you might say, really? Yeah, it's kind of interesting. It is kind of interesting. I do want to see, I want to take this yield out of here because I think it can be kind of confusing. The 10-year bond trending higher means, and actually I would say 10 and 30. Trending higher, meaning lower yields. We want higher yields in the short end of the curve. We want lower yields at the long end of the curve. By the way, that's why the Federal Reserve has been buying bonds. They're not buying across the yield curve equally. They're buying the longer end of the yield curve to keep the, say, the 30-year, the 10-year lower. Why did the market panic? Because the 10-year yield started going ballistic. Remember when we first crossed 1.4, 1.5, 1.6, 1.7% of the 10-year? You can track that on TNX. The market freaked out. Why? Because the market does not want to see bond yields head higher. Notice that the bond yields have settled down some. This rolling over, this TNX rolling over, if it were to, would be tremendous for equities. All right? It would be actually pretty darn good for equities. So those are the things that banks and I think macro folks, you can look at that. It's, some of that I guess would be fundamentals. Fundamentals would be the earnings per share, but macro would be commodities. Macro would be the dollar. Macro would be bonds. So this is a mix of what macros and fundamentals, and they are not the same thing. But you don't need to know, the definition. Just know that your macroeconomics are going to be dollar, inflation, growth, and monetary policy. Okay. And interest rates and dollar are going to be really tethered to monetary policy. All right. Okay. So is the clearing range the same thing as the initial balance? No. The initial balance is the first 60 minutes of the day after the bell. The clearing range is the first 30. So the only thing that I've seen so far that's even remotely interesting is that RTY and the NAS. RTY and the NASDAQ. That's been about the only thing that earlier this morning got close to potential buys. And by the way, if the markets don't give me a V-score or HPMR setup, let's look at the next set of setups because it's just after 10. And now I can start looking at breach retreats. So which markets have breached? It's 10:07. All right. It's 10:07 a.m. And which market or which indices have breached? And you can look at stocks too, gang. You can look at stocks too. Which stocks have breached? What does breach mean? they've taken out the range of the first 30 minutes of the day, preferably to the upside. RTY has breached. Notice that it's taken out the high. All right. So RTY heading higher. Go RTY, go. Let's see. S&P, meaning the ES futures, are heading higher and breach, and the YM. One glaring omission at the moment is the NAS. The NASDAQ has not breached. I don't find that, say, problematic, but it is a little disappointing, again, because what we have in the NAS is, again, that tech weighting, and if there's anything that the three broader averages overlap in, it is tech. So to see a more sustained move across the ESYM and the NQ itself, we would like very much to see. I'm going to give you the level that I'd like to see the NQ break. That would be, survey says, right there. You'll see it. Long entry. I need to see 805, 13,805 breached. It's actually 13,805 and a quarter, but I'd like to see 13,805 break. Now, the question is, well, then what, Rag? Now what? If that were to happen, then what? So I'll show you what the setups look like. And this is called a breach retreat. This is called a breach retreat. So let's at least entertain the notion of a potential pullback. And this would be a day trade buy of the Dow via DIA. Now, can you play YM? Look, when I'm in the futures room, I'll tell folks to focus on the YM futures or the micro. If I'm in the sector secrets room, we sort of say, well, look, you can play the YM or the micro if you'd like. A lot of our traders are fluent in both languages. I love fluent traders. But DIA, I love the day trade options. I absolutely love doing it. Okay. So what I'd like to do in this case is start thinking about, just bear with me one moment here. I'm going to check this here. All right. What I want to be able to do is buy the DIA when it pulls back. But this is where we don't have the zone quite yet. And a lot of traders, now here's what I want you guys to think about for a moment. What is the true 24-hour opinion of the futures? The DIA or the YM? What is a truer, more well-rounded opinion of what's happening in the futures markets? The DIA or the YM? The YM. The YM. Same thing with the NASDAQ. QQQ, XLK, XLY, SMH, CLOU, or NASDAQ futures. The futures are that more flowing 22 3/4 hours open market, not the ETF. That's more 9:30 to 4. I don't mind to trade the ETF, but I will set those ETF trades up via the futures contract. All right. All right. Let's see. Who is the first person I get to? I'm looking at the YouTube feed. There's always one or two company and pumping in some nonsense. Bye-bye. All right. That's the only problem with doing these things publicly. There's always going to be some. Yeah. Yeah. You hammered him, Lorna? I like it. I like it. I like it. Bye-bye. All right. So if we start to pull back, the zone that I'm going to be looking for, and this is really, really simple. Let me show you what this looks like. There's a high to low range that we've seen during the clearing, right? There's a high to low range that we've seen. High to low. That's the clearing range. And then I just pulled a 382, 50%, and 618. I'm looking for a retracement. And you see how that area is highlighted automatically for us? Again, you don't have to do this manually, right? But you can. That's the area that I would like to see the YM trade down into, and then I will buy the DIA calls. If that even happens, that's what I'm looking for. I'm looking for that YM to trade down into that zone. Okay? Now, those of you that are in the futures room or the sector secrets mastery, this is a breach retreat. This should look very, very familiar. You might ask, Rog, what if it doesn't? Well, once we've breached, the other choice, my first choice is going to be something like this. The second choice, because we've breached, is to buy the wave as long as we're double green, green over green down here. So this setup is valid as long as this looks like that. So there's two setups that I can look at right now. We've breached. I can take advantage of the retreat. That's that area that I've put a big number 1 across. And then there's another setup that I could take advantage of if the market comes back down to the wave. As long as we're double green, that is valid. So right now, I can look at the day trade buy in the Dow via the DIA with a retreat zone buy or a 34 EMA wave buy. So those are both valid and on the radar. The wave is going to be something that I would only recommend for my most self-directed traders. I would only recommend because it can be a style that can stop you out quickly because you can see the range is quite narrow. And if this goes yellow, it'll probably get a little bit more volatile. It doesn't mean that it's a short. It doesn't mean that it's no longer valid. It just means that the market might be a little bit more bumpy before it continues. But I would absolutely expect a continuation. I would expect a continuation. All right. So what strike would I look at on the DIA? So yes, great question. When I am day trading options, I focus on the Friday expiry. Now, if you want to go out to the next Friday, that's fine, but you can focus on the Friday expiry. So this week, it's, pretty simple, right? You can focus on the 23rd, but if you want to give yourself some more time, and you can go out to the 30th. By Wednesday, I'll think about both of them, but the 23rd is fine. All right, so 23 April. So this week, it's 23 April. The only reason I'll give myself a little bit more time is if I feel I've really gotten a great pullback and this market can continue, I don't want to run out of time. I don't want to deal with theta decay. But if you're going to be purely day trading, meaning you're going to be in today and out today, that 23 April is absolutely fine. And I focus on at the money options when the triggers happen. So what that means is when the YM reaches its zone, what is at the money or slightly in on the DIA? On the DIA. Okay. All right. Okay, next up here, bear with me, is what do we have? I'm trying to see if anything looks remotely interesting other than those. Well, the RTY would be the same conversation. RTY is double green. RTY has breached. So much like the DIA, I would be fine with an RTY pullback. So you might ask, well, what about the S&P, Rog? The S&P is tricky because my Dow is strong, but my NASDAQ has yet to breach. That's pretty telling, gang. The NASDAQ, which has a 104-point range this morning between the 9:30, 10 o'clock, has yet to take out the high. That's pretty disappointing. I don't know if we can blame Netflix for that, but that's pretty disappointing. What is Netflix doing anyway? Yeah, not so bueno. So I don't know that I would just squarely blame Netflix for that, but it sure isn't helping. And you might say, well, Rog, how do we know if we're going to blame Netflix or not? What we need to do is find out what weighting Netflix has in different sectors. So We know that it's relatively heavily weighted in a bunch of ETFs that, quite frankly, don't matter that much. Although FDN is an interesting internet software ETF. That one's one that we probably will talk about later today. Okay, XLC, Netflix is a problem for XLC. Is XLC a problem for the NASDAQ? Yes, it's the second heaviest weighted sector within the NASDAQ. So while Netflix does not have heavy weighting within the Qs, it does have heavy weighting within the second largest sector within the NAS. It's a little bit of a problem for me in the CLOU, right? You can see there, a little bit. But again, look at the weighting, 3.89%. That was a calculated risk to try to take advantage of CLOU on the eve of Netflix earnings. But when the risk is relatively low, it's because the weighting is relatively low. Although remember, even a low percentage weight, if the price movement is great, it can overcome that low weighting. So what it doesn't have in weighting percentage, it can create more volatility just by the sheer price movement, the amount of price movement. Okay, so is Netflix necessarily to blame on the Qs? Indirectly, yes. Indirectly, it's probably not doing any favors. However, if XLC can get moving despite Netflix, and look how XLC is struggling, gang. Is it because of Facebook? Well, Facebook isn't doing all that well either. Is it because of Google? Maybe I should blame Facebook and Google actually for NQ's woes. Yeah. So because the NAS is heavy, we want to be very careful about the S&P, because right now the S&P is able to outpace the NASDAQ because of the Dow. And that brings me to a point that if you're in the Simpler community, you know this because I talk about it a lot. But if you're not, let me tell you this, because it's something that really nobody talks about, and it's very much an issue for the S&P. Write it down somewhere, commit it to memory. The S&P is not the captain of its own ship. Never should you put a trade on the SPY or the ES without a solid read and understanding of what's happening in the Dow and in the Qs. And I mean never. You can even get more granular like we just did at the stock or even the sector level. But the thing is, the S&P is going to basically be either tethered to the NASDAQ because of its weighting, or it's going to be influenced by the Dow because of its weighting. The Dow is going to influence it a little bit more from the financials and healthcare aspect, and the NASDAQ clearly from the tech. So the S&P is never the captain of its own ship. So I take a very opposite angle on when people say, well, the S&P is the best, broadest look of the market. Yeah, that's true. But that doesn't mean it's the one you want to watch to understand what the markets are doing. In other words, if you want to know what the S&P is doing, look no further than the NAS, the Dow. And you might say, gosh, the S&P is strong, but it's not really rallying. Look at the NASDAQ. Well, it doesn't look as bad as the NASDAQ, Rog. That is true. Look at the Dow. You can literally see the tug of war. Pull up the S&P and then the NAS, and pull up the S&P and then the Dow, and you'll see how the S&P is stuck in that tug of war at the moment. If the NAS starts moving higher, the S&P will move higher more swiftly, right? If the NAS is stuck and the Dow rolls over, watch how quickly the S&P falls. That's where a lot of people get blindsided by S&P action, by not understanding what it's being influenced by. All right. Okay, so regarding the high-low boundaries from 7 to 9:30 with the V-score, is that setup playable all trading set? So that brings up a great question. The question is, what I'm talking you guys through right now, I focus on day trading, and this is actually really important. I focus on day trading only from 9:30 to 11:30. That's it. I day trade the first 2 hours a day. That's it. That's my focus. First 2 hours a day. All right. After that, I'm free to avoid the midday doldrums and focus on swing trades in currencies and commodities, stocks and ETFs. All right. So I can direct my focus away from the short-term stuff, because I really do believe in the old saying. So some traders might ask, well, why, Rog? I see a lot of traders trading all day. Let me tell you guys something. Whether you're part of the simpler community or not, this is a fact. All right. There's a saying: amateurs open the market, professionals close it. Okay, it's an old saying. Did I spell amateurs wrong? I sure did. The open, that means the open is just easier to trade. Why would I not focus on what's easier to trade? It's just easier to trade. The volume levels are fresher, right? Volume does have a sort of decaying quality, especially if you anchored your volume tools to earlier in the day. So volume does have a sort of decaying quality. So it's just easier to trade the open. The open is just easier to trade. I will tell you, the only and I don't like trading the close. One, because I know for me, in my brain, I'm better off in the morning. I wish the markets opened at 6 in the morning. I wish I could trade 6 to noon. When I was when I was working in California, I've done a lot of day trade. I did a lot of day trading workshops, probably a half dozen of them, out in San Jose, in their late 90s, early 2000s. And I loved trading out there. Now, granted, I'd have to get out of the hotel and drive to wherever I was driving at 4:35 in the morning, right? Even earlier than that, sometimes to start class. But I loved being able to, my mental power band is better then. The later in the day, I'm just not as sharp. So some of that's just my own brain. I know I'm sharper in the morning, and I'm going to start to lose a lot of that sharpness as the day goes on. So just me biologically, I'm not great at the close. That's not my power band. The other part of that is, again, if professionals are closing the market, it's going to be inherently difficult. The only person that I know that I've watched, so I know that year in, year out for many years, is John. John's great at trading the close. You'll notice I won't send out any signals into the close. So the only person I watch who has a feel for that is John. So if you want to trade the close, don't follow me. I don't mind saying, hey, gang, there's certain times that I don't want to be trading for any number of reasons. One, it's easier to trade the open, and most of you are going to be far better off being self-directed. You'll be able to be self-directed during the open. You're really going to need someone who's got the instinct and the understanding of the close to trade the close. And I know personally, when I go back and look at probabilities, and I'm talking over almost 20 years, I'm far better in the morning. Nobody should be trading the midday doldrums. I don't care who you are. Nobody should be trading the middle of the day, 11:30 to about 1:15 Eastern. Nobody. Focus on the morning, focus on the afternoon. Find out what you're good at. Find out what you're good at. I find very few people are naturally good at the close. All right. So, you have to know what's difficult, and you have to know, what you're good at. And that's why I focus on the morning. So we anchor that V-score, 7, 9:30. We find the high-low range. And then that takes me through about 11:30. And then I'm done. Day trading. Okay. All right. Hang on one second here. Because someone just mentioned XLE did a nice bounce off the 2 ATR. I do have that chart on TradingView somewhere. Hang on one sec. Got this thing in Raghee Labs. Let's see here. One of the things that I've been doing a little bit more of, and who gave me that? Who just mentioned that with the 2 ATR? One of the things that I like to do, Bob, is I'll look at a moving average, like a 55, and I'll pull some average true ranges off that sometimes too. Yeah, but I agree. It's I think what's been troubling energies is the attention that has been mostly negative, and this idea that it's a crowded trade. But if crude continues higher, it's going to be tough for energy stocks, XLE, OIH, to also not head higher. It's going to be very, very difficult for them to not head higher. Yeah. So that's good news for our reflation trades and our energy trade. Yeah, for sure. By the way, the NAS just 4 minutes ago breached. So that's going to be very, very good for our current open book of trades in SSM and Sector Secrets Mastery. And as far as intraday traders looking for a little bit more clarity across the averages, that sure ain't going to hurt. So again, what do I mean by a breach? What I mean by that is we've taken out the high between 9:30 and 10. That's the clearing range high-low. We've taken out that high. Remember I said we had to take out 805? Bingo. Now, the market may not pull back, gang, but this is why, you know, when we already have exposure to CLOU, Box. There's a number of places we already have exposure to. This move intraday is actually serving us end of day. So when you can have a more, and this is really important. I know those of you in the mastery know this, especially in the futures room too. A well-rounded trading approach is not trading more symbols as a day trader. A well-rounded trading approach is mastering time frames and time horizons. I think a lot of people think, well, I'm well-rounded because I can trade lots of different symbols and I have a lot of different strategies. That's not actually well-rounded. Well-rounded is the ability to trade different time frames so that while you have, for example, an open long position in copper or crude oil or corn, I did not mean to put the alliteration in there, although I love alliteration, but while you have that going on longer term, you're also able to intraday trade. So if I don't have any day trades on any specific day, those of you that follow some of the swing trades that I do in the futures room know we're long copper and we're long crude and we're long corn. We've been, you know, in and out of Canadian dollar. There's a lot of things that we can do that don't require us to watch 1 minute charts. That's a separate segmented part of our life. If you can embrace both time frames, you've got things longer term swings, usually a daily time frame that are working for you, like corn or ZC, while you're looking to day trade the RTY. My corn long position, and whether you're in the futures room or you're in the sector secrets, we're probably just going to flat out run out of time on this CORN than anything. It was a hard one to take through the volatility of the USDA, the water report. But again, this is what a reflation trade looks like. Grocery store commodities, hogs have been on fire. Beans have been on fire. Corn have been on fire. These grocery store commodities, the things that nobody likes to talk about, unfortunately, these have been the things that are moving. All right. Now, why not lumber? Gang, lumber is a very, very thin market, unfortunately. Super, super thin. All right. Super, super thin. So, again, what's really nice is whether or not I get a day trade off or not, you know, I can see a nice upslope in the overall P&L of my longer term swing trading book. Okay. Does that make sense? All right. So we've got here for about an hour. And again, those of you that are in the live stream, thanks for joining us. You're getting a good look at what we do in the Simpler Futures room and also what I do in Sector Secrets Mastery. So I'm kind of running through sort of the gambit. And I know if it's your first time watching this, it might be a little bit daunting, but this is live analysis, right? This, you know, we're not doing a workshop here. This is live analysis and live discussion about what we want to be doing. All right, so I'm going to go back here because by 10:30, I pretty much know what I want to do. So all I'm doing now is I've got, and this does help when you are a day trader. It is nice to have multiple monitors. I've got 9. So across the top row of my trading rig, and here we can do a gratuitous trading rig. Trading rig shot here, just so you guys have an idea of how I kind of keep all this straight. Where's my Instagram? There we go. And let's see. I'm going to log in. Okay. Just doesn't show me my Instagram. The gram. Let's see what we have here. No, I want to go to my Instagram. How do you do that? How do you go to your own Instagram feed? Let's see. I don't know how to do your own Instagram. Is this how you do it? There we go. Okay. So I'm going to show you here. Yes, it's just complete randomness on my Instagram. But somewhere here I do have, and this is going to matter when if you do decide to day trade, having the ability to look at a lot of things at once is really important. Yes, look at my puppy. She's so big now. Holy cow, I guess I posted this a long time ago. Oh, you guys remember this thing? Kids have iPhones and iPads now. This was hours of fun for us when we were a kid. Isn't that hilarious? Okay, hang on. Getting close. Oh, that's the same said puppy when we first got her. Yeah. Oh my gosh, look at those ears. Oh my gosh. I know I got that's a shot at it. There we go. Okay. So what I mean by being able to keep an eye on a lot of stuff, just so y'all know, you guys are sitting on you guys are watching this monitor right here. But across the top, I've got the Dow and the Nas and the S&P and the Russell and crude and VIX and a whole bunch of stuff. So this is when I'm day trading. I'm keeping an eye on all of these. And these are 27-inch monitors. Okay. So if you are going to day trade, gang, there are some restrictions to if you're looking at very few screens. I'm not saying to run out and get a gazillion big screens to do this, but it does give you an edge. And if someone else is able to scan across this stuff live, and you're constantly scrolling the same few symbols on one screen, I won't kid you, you're going to be at a little bit of a disadvantage. So, be realistic about what you want to accomplish. And if you don't have the ability to pay attention to 1 minute time frames, just lengthen the time frame out. That will also require less, rig, right? Less stuff to have to keep on a desk and track. So the longer your time frame, the longer your time horizon, the less requirement for watching things at such close range. All right. So if we get a pullback, I'm not holding my breath. I really am not. If we get a pullback into the retracement range, cool. If not, I think most of you are realizing that just the markets are traveling higher using the wave. So again, let me reiterate what this wave setup is. Once we breach, like we did right there, you can buy calls in these situations. So this would be the SPY. All right, but you got to breach and it's got to be double green. Breach and double green. And notice it's the futures contracts I'm watching to buy the ETF. IWM, just pull back there. NASDAQ, I can't do, right? I could not do it till recently. So let me show you what the NASDAQ looks like. And I'm glad that the NASDAQ's finally trading higher. We're going to have a little bit of a challenge. It looks like the 13,800, the 1320 level is creating a little bit of an issue. The NASDAQ is double green. So yes, technically this pullback to the wave could be worthy of buying QQQ. All right. Now let me show you sometimes when the wave switches. Let's take a look at the Dow. So again, what are the criteria? 1, we need the breach. 2, got to be double green. Now when this pulled back right in here, all right, what happened? We started to go from green to yellow. You see that right down in there? We started to go from green to yellow. So it's not that the buy is invalid. Just anticipate the market might need a little bit more latitude before it resumes its movement higher. Otherwise, I can usually rely on the bottom line of the wave to support the movement higher in a double green. That's not a short. I would not be very twitchy about dumping your futures contracts or your options. This is one of the many reasons why the option is going to give you more latitude. The only thing that we have right now has been this is why I call it that, quite literally surfing the wave. But again, when we're allowed to do that, these criteria that I'm sharing with you all is really important. We got the breach, got the double green, we surf the wave. You surf the wave. All right. Okay, let's see here. So I hope that answers a lot of the intraday stuff that I love to do. And by the way, it's not just futures. You can do clearly, you can do the options as well. And I love day trading options. So let's talk a minute about, Rog, okay, what is the cost? If you're trading futures, you can go get initial margin for day trading as low as $500 a contract. Yes, it makes it really affordable. But remember, you're still losing as if you traded the full size contract. So it is riskier because the dollar value of each point is not small. It's not small. The wins can get very big quickly, and so can the losses. For traders who are just starting off in day trading, I love the micros for futures, as long as you're using sound risk management. That scales. But I love the options even more. So what you would end up doing is looking at a 339 call. What does an April 23 339 call look like on a pullback like that? It's usually going to trade around 220 or less. That would probably be about a 220 call. What is 220? $2.20, which is $220. And look, you can budget whatever it is you're comfortable with based on your account size. But to grab one of these, two of these, five of these, for the most part, should not be that cost prohibitive. It's got a very low risk barrier, very low risk, and a very low barrier to entry, for sure. What about something like the IWM? These are very inexpensive because we're not paying a ton for time. We're not looking for expiration that's way out, because that's one of the elements that would increase the cost of the option. And we're not buying volatility. Let me explain what that is. If you wrap your head around what I'm about to say, you're going to have an edge on options trading over most folks. The secret to options trading is mastering volatility. The secret to options trading is mastering volatility. You want to collect when volatility is high. You want to pay, buy, debit when volatility is low. Most traders do the exact opposite. They buy calls in an up market. They sell puts in an up market. They buy puts in a down market. They sell puts in an up market. They do the opposite. What are you going to pay for? If you're buying a call, you're paying for something everybody wants. There's more demand. You're going to see, if you're looking at the bid ask, the time in sales, the last, is going to be on the extreme edge of the cost. Meaning, if the markets are moving higher and you're looking at the bid-ask spread, the trades are going to be going off at the ask because people are having to pay up. Okay? If you're buying puts in a down market, the same thing goes. If you're trying to collect credit, you're selling an option. Think of a put credit spread. If you're trying to collect credit on a put and the markets are going higher, you think you're going to collect a lot? Nope. The timing for put credit spreads, as uncomfortable as it may seem, is when the markets are selling off. In fact, the timing, think about this for a moment. The timing for a put credit spread is actually the same as the timing for a long call. And if you can wrap your head around that, you are going to have an incredible advantage over everybody else who chases Momo when they're trading options. All right. Chris R says, a good thing I go to, because of my, well, I don't have to look up at any of this. It's pretty much eye level, but yeah, my eyes don't love me. My eyes don't love me, but I do see my chiropractor every 14 days. That is true. That's hilarious, but that is true, Chris. Okay. Let's see. Flyfish says, well, I have more fly rods than RH has monitors. I only have 2 fly rods. Flyfish. I'm sure you definitely got me beat there. And I'm sure you used them a whole lot better than I do. That is for sure. I haven't taken out my fly rods in a long time. Oh my gosh. Are there tax benefits to trading futures? Nick, over stocks and options? Yes. Yes. Now, I don't want to go giving advice there because I hire people to do that for me. But yes, it's 60/40 tax treatment. Yeah, it is much better. It is much better for sure. Yeah. Are there ranges where I would define high versus low volume, or does it vary by asset class? So when I'm looking at volume, here, let's do this. I'll usually, so when I talk about volume ledges and things like that, one moment here. Okay, there we go. So if I'm talking about volume ledges, really, I mean, Chris, it's all relative. It's all relative. So here's a volume ledge, here's a volume ledge, here's a volume ledge, and then I can see there's another one right in here. So I got a lot of volume in here, although I've got a point of control here and a point of control here. So I'm not surprised that we have so much in that area. There's a little volume ledge right there. But then you see how it just drops off, another volume ledge right there. So it's just all relative. Yeah, it's just relative. And it's just visual. It's just visual. And for those of you that are on TradingView, and want to put these volume tools, this is a free tool, gang. I mean, you know how much I love my free tools. Go into indicators and then go search. Here we go. Go search volume profile. And a lot of you've already found this on your own. Go search volume profile. And I don't know that it's going to be the first one that comes up, but look for KV4 coins. I use that one. You can see how many, there are a gazillion indicators on TradingView, which is both good and bad. But yeah, grab the one from KV, the number 4 coins, as in money, coins. And that's what I use. I actually put 4 of these with different lookbacks on my charts. But yeah, that'll put these nice volume ledges along the right side of your screen. And those are really powerful, gang. Now, I think that this is a great supplement. It's not going to supplant your submarket sonar analysis, but it's a great supplement. It's a great supplement. And by the way, those of you that are in the sector secrets, I talked quite a bit about the VWAPs in that video that I sent to you guys. So if you did not see that video that I sent out yesterday, the 15-minute video update, check that out, because a lot of the topics we talked about here this morning, as well as how I anchor the VWAPs, is in that video. Okay, so do check that out when you have some time. Again, it's in the alerts. All right. Can you install? Hey there, Grace Vision. Can you install my indicators on TradingView? Not all of them yet, but the free ones from Tops, the Grab, Wave, Darvis, Propulsion, yes. Yes. Many of them, just not the premium ones yet. Hopefully soon, but not yet. Okay. How often do I monitor VIX, Applejack? So, Applejack, that is my favorite sugary childhood cereal. And you just said that, and I just absolutely thought about a gallon of whole milk and a box of Apple Jacks, then going into a cereal coma after that. So what I do, actually this monitor right here, I have crude oil on one half and the VIX on the other. So I'm glancing up at it a lot. I'm just kind of glancing up at it pretty consistently. All right. Oh, Apple Jacks. Gosh, I love those. I mean, I think they taste a lot like Fruit Loops, but I'm more of an Apple Jack person. All right. What else do we have here? So yes, you can install, just go to indicators and search Simpler, and the free Simpler indicators that we have made available are going to be there. There won't be a little red lock next to it, and you can install that on your TradingView. Okay. And then if you're a member, gang, in Sector Secrets, I shared, Lorna helped me sort this out. I shared a TradingView layout with you guys, and it's in the weekly watch list video. All right, it's in the weekly watch list video. Whiskey says gnarly setup. You know the coolest part of this, Whiskey? Here's the coolest part. Now, not counting the computer, because Daryl back at the office hooked me up with a great computer from Falcon. So this thing's awesome. It glows blue in the front and on the side. So barring the computer, this is a dining room table from IKEA. And not a single one of these monitors, I think they're all 27-inch. On a single one cost me more than $150. So yeah, a lot of people say, oh, they get these fancy, you know, I have one of those fancy rounded monitors. I'm kind of, some days I love it and some days I don't. These are all flat. So if you wonder why can't I just get, say, 2 of those 27-inch curved, I'm kind of the jury's still out on those curved monitors. So I just get good old-fashioned flat LEDs. Not a single one of these cost me more than $150, and they're made by Philips. So an IKEA dining room table and a bunch of $150 monitors. This is not an expensive thing to do. It's really more space consuming than anything. Yeah. So I'm not talking a super cost prohibitive thing at all. And I think a really good layout for really active traders would be a nice quad 4 monitor setup, which is what I've got behind me that my husband, when he was trading a little bit more actively, was using. Okay. Yeah, Mike, you can reach out to Daryl about the trading computer because he's the one that spec'd that out and had it sent to me. But I did get it from the folks, I think it's just tradingcomputers.com, Falcon. Yeah, these guys. And actually, that's my computer right there. That thing right there. That 52 whatever. And I forgot what Daryl outfitted it with. But yeah, that's that 52 GT, I believe, is the one that I've got. I think. You know what? It might even be the 37. It's not like the highest end. It's not the blue ice or anything. Again, not super high end, but it looks just like that because I've got that same box. But I think you can customize, but it looks just like that. So I'm guessing it's the 52, but it may be the 37. But I had some growing pains with it at first. The only other computer that I've been eyeing as a trading computer is maybe an Alienware. I know John uses an Alienware. Talk to Daryl, and I know we have discounts for simpler folks. Yeah, I don't think my computer was anywhere near that, but definitely talk to Daryl during one of our tech sessions. Yeah. And he can walk you through that. Okay, gang. So let's keep moving forward here. We get to look at some longer term stuff. Am I still bullish on these markets? Yes. In fact, our NQ might be setting up. Let's go take a look. I played the wave a few times. I'm still in some wave pullbacks on the YM. I'm still in some wave pullbacks on the RTY. I've been a little bit more hesitant on the SPY because of the NASDAQ. The NASDAQ is starting to look a little interesting, though. So once we have the breach, step 1, I can look at the range of the retreat. Step 2. If I can trade down into this area, down in here, where I think this is the VWAP, by the way. I've got 3 anchored VWAPs right here. This could be very interesting, this little zone, which is sitting just in front of the retreat area. You could be a little aggro with a 13,770 buy. You can be a little aggro with that 13,770 buy, meaning at 13,770, you can shop out some QQQs. I would then make them moderate around 13,745. And then let's put our conservative right around, say, 720 to 10. So 70, 45, and then 20 down to 10. That's what I'll be looking for. So if we can sell off down to around 70, I'll buy. Now, why do I call things aggro, moderate, conservative? Because it's the easiest way to communicate whether I'm sending out a sector secrets alert or whether I'm sending out a day trading alert in the futures room, in the simpler futures room. It's the easiest, quickest way to communicate. Play it with small size and realize the risk in terms of entry to stop is the greatest chasm. Again, aggro denotes me basically telling you, play it with smaller size because the chasm from the entry to the stop is the greatest, a distance. In other words, it's the most risky. I don't talk about probability when it comes to aggro, moderate, conservative, because the truth of the matter is nobody knows where the markets are going to go. I just know that it's a higher probability zone for me to try to take advantage of. That's all. Meaning I think the markets are going to bounce from that area, but the risk associated with that level is just greater than some of the others, meaning moderate or conservative. Conservative is the lowest amount of risk. It's not in any way denoting it's a higher probability trade. It's just a lower risk. Again, risk being calculated by the most simplest way to define risk, which is what is my entry and how far away is it from my stop? That's it. That's it. And by the way, in the mastery gang, I know a lot of you have been asking about more detail on position size. All right. I know that's been a huge request. So let me address this two ways. One answer, I'm telling you right now, you're probably not going to love. The second answer, you're really going to love. Okay. So I'm working up on some things for probably May, and I don't know when, but in May, I'm going to pick a Monday and we will do a little bit more market money math. Okay. Because I've heard a lot of folks say, Rog, we love what you're doing in there, but we're still struggling with position size. And I get it. So the first answer is, gang, there is no way that I can tell you how many contracts you can trade. I give you the numbers, I give you the arithmetic to crunch it, but there's no way that I can account for 500 different accounts of varying size and say, well, let's trade 3 contracts. It's very irresponsible. Okay. I also don't want to get into the trap, and it is a trap, gang. Okay. Of if I happen to, because everyone notices these things, if I happen to be on a hot streak, everyone's going to play larger size. If I have more size in one trade than I do another, people assume it's because I like it better. Gang, I love all my trades equally, like a mother. Right? Because somehow or other, I think that, and again, I totally get it. I totally get where you guys are coming from, because the things that you guys have asked, I've asked from my mentors. Just trust me when I tell you, I'm giving you the answer a whole lot more nicely than they gave it to me. I don't care who it is on this side of the mic. Nobody knows that this is the one. It only works that way when you're watching movies like The Big Short. Okay? Nobody sits on this side of the mic and says, gang, this is the trade. Oh yeah, I know this is the one. We don't. We only can calculate probability and risk. That's it. So size, sometimes if I'm playing 10 contracts in something, it might be because it's just cheap, right? If I'm looking at a $7,000 option or a $700 option, I'm probably going to have more in number of contracts of the 700. Doesn't mean that I like it better. It just means within a budget, I can buy more of them. Got it? Does that make sense? So I think that this idea that whether it be me or John or whomever, right, can sit here and say, well, this is the one that I really like. That's why it's so big. We don't know, gang. Every trade we take, and believe me, when I tell you, every trade we take, we hope is going to win. Think about how you guys felt in middle school giving a book report. Unless you were an extrovert and a performer, most humans get pretty nervous doing things in front of a group. I mean, public speaking does in many ways rank above death, which just tells me people don't really understand what death is. But public speaking still apparently ranks above death. So imagine public speaking and trading at the same time. So now there's the embarrassment factor and the humiliation factor, because when you're wrong, boy, gang, be wrong in public, right? It's no fun. It's no fun. So believe me when I tell you guys, we don't put something out there unless we hope it's going to work. So the idea behind position sizing is only this. All right. Can you afford to be wrong? because you can't follow a trader into a trade that you can't afford to be wrong in. So then your job really, and pressure me on this, is, Rog, what's the risk of this trade? That's the only question. Not do you like it more? I like them all, right? Like a mother loves her children. But I don't, and I'm not a mom, but I love my cat and dog equally. No, that's probably not entirely true. Anyway, the real question to ask is, can I afford to be wrong? So sometime in May, and I don't know when it's going to be, but sometime in May, we're going to do a deep dive on these concepts. And I'm going to once again walk you guys through the arithmetic. And it's really third grade math, right? I did an entire class on this. And you want to know something funny? And I think the live stream folks will appreciate this too. You know what, of all the classes I've done, and this is not to brag, this is just a fact. Of all the classes I've done, every year, the only class that's ever bigger than one that I do is whatever John does, and rightfully so, right? He's so my smallest class ever, the one that people really weren't interested in, was the one that I did on position management and size, risk management. That was my smallest class ever. Isn't that funny? Because and we're all guilty of it. Right? But you have to check yourself. We all want a new widget. We all want a new indicator. We all want a new strategy. But the one class where I say, guys, my husband doubled his account, rank newbie, using risk management to make sure he didn't blow up. He doubled his account in 83 days. I know that may not sound sexy anymore. But back then, 2 years ago, $10,000 account turned into 21 and then 26,000 in 83 days. All right. And the joke was he was going to buy himself a Ducati. He ended up buying his mom a car. And that class, nobody wanted to see. The Moneyball class, exactly, Milo. Right? The Moneyball class, yes. And I'll tell you what, I loved that class. Yeah, Trish and I, my partner here in the office, boy, that was a tough class to put together. I will tell you, that was not an easy one, because there was just, and so go figure. I'm glad that you guys are asking me that. So kudos. You guys are in the minority for peppering me with these questions. And you're realizing at some point, it's not the indicator, and it's not the strategy, and it's not some new whiz bang, whatever. It's, am I position sizing right? So sometime in May, I'll let you guys know. We'll do a Monday session. We'll spend an hour or two going through the math again, going through that market money math. Like we did when we first started Sector Secrets, we'll do that again. All right. And I'm telling you guys right now, whether, if you're a current member, great, you're going to benefit from this. But if that's something is the missing link from your trading, you're going to want to be here for that. And it will be in May. We'll do when we do our Monday sessions, one of our live trading sessions, we will deep dive into that a little bit, or we'll just do a separate session. By the way, I think we're moving our Monday live to the mornings, so we can do a little bit more of this kind of stuff in the morning. How many of you have day traded any of this, kind of followed along, waiting for the pullbacks? I mean, how many of you just bought 770 while I was yakking away? How many of you just scooped up some NQ, some QQQ? What are the odds? Says I'm in. Yeah, so sometimes I start yakking and, but that's why I put the numbers out there for you guys. But yeah, I don't know where it's going to go, but let's see if it can get to 13.8. Let's see if it can get to about 13.8, maybe 13.799. Just step out in front of that. But if it can get up to that area. But in the meanwhile, I know NQ was a retreat, but in the meanwhile, gang, look at this stinking YM. Surfing the wave like Laird Hamilton. Look at this. That's what I'm talking about. Majority double green. Breach, surf the wave. Okay? I refrain from that in the S&P because remember, the S&P is not the captain of its own ship. The RTY doesn't care what the rest of the markets are doing. Promise you that. They could care less. All right? Because it's completely weighted differently. So now would I tell you that this is a great time to be buying the wave? As of right here, no. It's valid, but I would say not as good. What was good? Back in here. Okay? And then those of you, Twitchy, this makes me think of you. Little red dot, aggro buy. I don't know if you jumped on that. That was pretty decent too. But notice it's not some magical indicator as much as it is the underlying structure, gang. The breach has occurred, giving us a slightly higher probability of strength because we've taken out the high of the clearing. The double green confirms that we're in a bullish structured environment. Notice we're spending a whole lot more time figuring out what we want to do based on the environment. None of these indicators are magical. These are moving averages. That's it. These are moving averages. That V-score low was achingly close. Yeah, I hear you, Twitchy. That was achingly close. Bill R says Van Tharp charges many thousands for what I just said. Oh, really? You know, I read some Van Tharp stuff, gosh, probably 25 years ago. And, you know, clearly he's brilliant at what he does. I find his stuff a little complicated. I think Ryan Jones is very interesting too, Bill R. And you know who's also really, so I would say my money management comes from, well, one of my mentors was a huge Basso and Tharp fan, Tom Basso and Van Tharp. But I'd say it's a combination of Tharp, Basso, and Jones. And like I said, a lot of people like to run around talking about all the things they've created when in fact, whether they know it or not, they're, again, probably standing on the shoulder of giants. So what I like to do is find people who've spent their life studying a particular topic and then distilled it down to what they think is the most valuable. And then I'll go about curating. I think there's a whole lot more benefit if you're a trader to curating information and strategies than necessarily always going out and creating. Now, I think for me, early on in my career, I did a lot of creating because the indicators didn't exist. But definitely, I mean, a lot of what I do is Charles Dow. Absolutely. It's a curation of a lot of Dow and Darvis. Yeah. So it's a lot of Dow and Darvis. So no doubt I'm influenced by people like Tharp. I mean, these people are legends. Basso is definitely a legend, a market wizard. And then, you know, I discard what doesn't work for me. I think Bruce Lee, right? Very influenced by what he talked about. How did he come up with Jeet Kune Do? He took from Western boxing. He took from hardstyle karate. He took from wrestling. And he came up with this curation of what worked and didn't work. I think that's what we need to do. Ryan, I think his name is Ryan Jones, Trisha. Yeah. Okay, let's see here. Let's see what else we got. Let me grab a few more questions. How's everyone doing so far? And then, like I said, I'm going to try to catch up with some more questions. My sector secrets, folks, you know, look, pullbacks are a bear. I do want to talk about some pullback issues. I do want to take a few moments to talk about pullbacks here for a moment. Pullbacks are tough. No question about that. Let's talk about some pullbacks and these out of sync or in sync pullbacks and the challenges that presents. All right. So we're going to segue a little bit away from the day trading now because it's 11:06, gang. The day is winding down. A lot of day traders wind up. So by 11 o'clock, their coffee's kicked in, they're awake, and then now they want to trade. That's exactly the wrong thing. You got to be ready at 9:30. I mean, at 9:30. And you're going to focus on those first 2 hours. You can't warm up, wind up, get ready for the first 30, 60 minutes, and then start firing off trades at 11 o'clock. You're in a low probability time. Volatility is contracting. Volume is disappearing. Europe is closing. Okay. All right. So let me talk to you guys. I'm going to use GM as an example. All right. And this is going to be really important. Really important. So this is that topic earlier that I mentioned. We'll talk about this more in live trading on Monday. So by the way, those of you that are in the live stream, on Monday, we're going to do our monthly, although we do a whole lot more than that, but we're going to do our monthly live trading. That's going to be on the whatever Monday is, 26th. Okay. So on Monday, we're going to get together and do this again. And if you want to join us, if this is something that resonates with you, and hopefully it does, long and the short, just a philosophy, gang. It's not, well, it's a day trading versus swing trading thing. Same tools, same approach, same mindset, same management. It's just being able to approach this in this index sector stock type mentality, fluid across multiple markets, fluid across multiple timeframes, or short and long, really. What I'm going to teach you now is something that I think will be really, really important, and we'll talk more about it on Monday. But if you guys head on over to simplertrading.com/sector, come join me for a quarter. I'll tell you this, whether you hang out after that, you will in 90 days have an MBA in swing trading and in day trading that will last the rest of your career. Plus, you'll get my tools that I share with members. All right. So come check it out. It's really a 90-day immersion into what I do. Okay. And this has been a difficult market. So this is a really important time to remember that this 2021, gang, this is normal. 2020 wasn't normal. Don't go looking for 2020 again. If you get a few more of those in your career, awesome. But what we're getting in 2021, this is trading, gang. And if you want to be able to navigate this. Now, let me talk about something that was pretty difficult. And I think this will resonate with what's happening with GM and GM's waiting. So let's start at the root. We have a trade in GM. And we've taken GM before. So GM is not a new trade for us. GM and Ford were great. Why did I not take Ford? Too close to earnings, too close to that impact event. So I know this is weighted in cars, but nobody trades cars. Every now and then, do click on one of these and just see if they're trading at least 1 million in volume. 17,000. When I tell you guys that most ETFs, and there's about 7.9 million of them out there, nobody trades. Nobody trades. So they're not that influential on the stocks within them, but they are still kind of helpful because you get a pre-curated list of stocks that somebody thinks is important to group together. Okay. So when I look at GM, the first major influential ETF that we run across is XLY. I think a lot of people don't realize that GM is pretty heavily weighted within the consumer discretionary. And you know, consumer discretionary, GM has a pretty good attachment to NASDAQ. Isn't that funny? By the way, gang, your NQ buy off 770 just hit 805. Scale out. Scale out. Listen to me now. Believe me later. Scale out. Okay. So when I look at GM, weighted within the XLY, I know it's going to move with that XLY. So here's what happened with GM. For those of you that went, what the heck happened? The easiest way to describe this is GM's trend intact? Yes, a couple of yellows don't bother me. We've bought in these yellows before. If the preceding trend was up and we transition to chop, it's okay. Stick with the bullish bias. Okay. What happened to GM is that it went first. In other words, the XLY really didn't start to pull back until April 19. GM started pulling back first. So when XLY did pull back, GM got hit harder. So you might say, well, Rog, should we take a trade in that environment? Well, now you know to separate. Let me show you another setup. The previous time we bought GM, end of March, right? Where was XLY on March 2-3? Where's XLY on March 2-3? Right here. XLY was already pulling back, struggling a little bit. Guess what GM was on March 2-3? It's a relative outperformer. So one of the things that we focus on, so are these two trades similar? They're both pullback buys with double green. The nuance is GM was a relative outperformer that most recent time we traded it earlier, and this time it wasn't. Does it make it any less valid? It's a slightly nuanced, different setup. Does that make sense, gang? The difference between the previous setup, which was, it's bounced around for about 5 days on us, and the one that this one where it dipped a lot harder and lower, The difference was GM back here was a relative outperformer. This last time, it actually wasn't. XLY was outperforming GM. So my thinking was, well, if XLY is going to keep outperforming, then and GM is pulling back, XLY can pull it up by the bootstraps. And that does happen sometimes. What happened this last time is that GM was way out in front, no longer a relative outperformer. When XLY pulled back, GM, full on, as you guys can tell, was a Charlie Brown and Lucy in the football situation, right? That's GM. That's Charlie Brown. That's what happened. So that relative outperformance, and I will admit, I might have been a little too lax about that because GM has been such a good performer for us, but that's how important. Here I am having to remind myself of my own stuff. That's how important relative outperformance is. Does anyone have any questions on that? That's how important it is. So, by the way, NASDAQ. Let's go back to that NAS because I need to scale out again at some point. Let's talk about the NAS. Just out of curiosity, how many of you guys grabbed that NAS 770? It was an aggro at best, Okay, now what? Remember I said scale out? Here's why we scale out. Not that anybody knows where the markets are going to go to the upside. Okay. By the way, let me ask you this. After yesterday's move, how many of the perma bear, the crash is coming crowd was throwing confetti all over the place? Did you guys see that? Did you guys? It was on financial media. It was on FinTwit. It was on YouTube. All the perma bear, the crash is coming crowd. And I'm thinking, you knuckleheads. The Dow is still screaming higher, as are transports. Charles Dow 101. Don't bet against that. S&P is still moving higher. XLV healthcare was screaming higher yesterday. There was no sell-off in XLV. Tech, which has been the laggard of the market, tech's been a laggard. Tech struggled some, and it struggled all the way down to the 13 exponential, which I don't know anybody who considers that even the beginning of a reversion to the mean. Shallow pullback. Now let me tell you where I could have positioned these better. What hurt me, what hurt us, was mostly that sink. Most of our book is doing great this morning. It's back on track. What hurt us was that synchronicity between the sector index stock. Yesterday, we did get some fills. If you guys saw yesterday, I kept plugging away with the lower end of our fills. And you guys saw we got fills at the conservative level in GM, right? You guys saw that, right? We were able to pick up GM at that conservative level. That GM trade from the conservative is doing great. How much that cost us? A whopping $1.15. Okay? Because they're pretty close to expiration. We're going to step out before earnings. What else were we looking to buy? Retail, XRT. What else were we looking to buy? Dropbox, conservative trigger, moving up higher today. Box is still stuck in a range. That's a little frustrating. I would say Box is sort of ticking me off, but it's not hurting us. So and I know Dropbox wasn't perfect, but it's back up. We picked that up for $1.86. Yeah. What else did we do? We bought some Canadian dollar, not Canadian dollar, Canada. We bought the country of Canada yesterday. We own it now. We bought EWC yesterday. So when dips happen, everybody who's got a bearish thesis and all the FinTwit and all the financial media will just reach into their bucket of topics waiting around, and they'll just run those narratives. Because what they do is they talk about what's happening. They're talking about what's happening. They don't talk about what's going to happen. They're just reporting back to you what's happening. They're more like sports commentators. Sports commentators, unless you're Tony Romo, who, my gosh, I'll watch a game that Romo's calling, even if I don't care about the teams, because he's the only commentator who's literally coaching from the booth. It's unbelievable. So this is everybody but Tony Romo. He's amazing. He is amazing. I enjoy his commentary so much. But anyways, other than Tony Romo, what do the commentators do? They're just telling you what's happening on the field. So just remember that when you're listening to folks on television, they will parade the people across television that are usually just going to sort of talk about what's happening now. Yeah, Chris. Oh my gosh. I think people have, look, I thought he was great, and I'm not a Cowboys fan, but I think people have a whole new respect for Romo, don't they? I'm glad Dak is healthy. I like him too. He seems like a good kid. I'm a big Dak fan, and he probably has some more physical gifts over Romo. I mean, his mobility alone. But boy, is Romo really showing people he knew football. Yeah. But it's so cool to see Dak come back from that ankle injury. All right, so box is looking better. Yeah, box is looking better. That's been sort of moving sideways, but box is looking better. Yeah, I'm with you there, Twitchy. It's Nick. Yeah, it's definitely looking better. Marco, here's what I'll tell you. Let's jump on over to Koyfin for a minute. Here's what I'll tell you. Here's what I think. All right. And that is, if I'm looking at what retail is doing versus institutions, this is how rotation works, gang. It's really not complicated. Retail loves buying higher highs. And in an uptrend like last year, retail confuses an uptrend with brains. Anyone can trade an uptrend, gang. I like to joke and say my cat could prance across my keyboard and probably pick a winner in 2020. If you guys remember in the 90s during the tech boom, they had like a joke where the monkey threw the dart at the board and picked some random symbol, and even that went up. That's how these wide bull markets tend to work. Right? Everybody does well in uptrends. Pullback buyers like me, no problem. Momentum breakout players, no problem. You know, everybody does well in a screaming uptrend. The uptrend we saw in 2020, I believe the rate at which it accelerated was the fastest in the history of humans. So a lot of folks kind of mistook a very, very, very generous market for brains. Now we have a different market. But what do retail traders do? They tend to buy higher highs. What do institutions do? They rotate into cheap stuff when they can't buy higher highs anymore. So it's sort of our job to know what's in fuego. And this is Koyfin, gang. I talked about Koyfin at the onset of our, when I was putting in all the notes. I put Koyfin in there, yet do get a free Koyfin account. What you'll be able to track is where the rotation is most likely to come in. So where would institutions focus? And they may not even be focused on the broader sectors. They might be going a little bit more niche. And you might say, oh my gosh, Rog, this is a nightmare. But you can just run your cursor down each one of these. And what you're looking for, like IGV has my attention. That's software. What else has my attention? Internet has my attention. What else has my attention? Ag. Ag's ticking up, but keep an eye on ag. That reflation trade unwound about mid-month. It's coming back. All right. What else looks good? And scroll down. I'm going to look for things that it looks like the market sort of left behind. Retail buys at higher highs. Institutions rotate when they're no longer willing to buy the higher highs, and they'll buy the stuff that's been neglected. You've seen this already. Last summer, when the tech stocks were going ballistic, think what was happening with, say, Tesla. Think what was happening with Peloton. Think what was happening with work from home stocks. That was mostly a tech software work from home rally, right? That's sort of led the charge, the parabolic moves, and then everything went, right? But I say everything, not everything went. You know what did not move higher? Energies. You know what did not move higher? Financials. So when the inevitable rotation came, retail is going to continue to buy at higher highs, but at some point, banks, institutions, money managers, hedge funds are going to say, well, where can we scoop up some cheap value? I don't mean by value versus growth. Where's there some cheap names we can scoop up? Because the markets are always rotating. They're always like a Ferris wheel. They went and bought energies and financials, and then those started to outperform. So that's what I mean. I don't want to focus on, like, for example, oil services. Yeah, I'm looking at oil services hard. Now, this might be somewhat portfolio too. The cool thing is, if you can understand this, you're going to manage your longer term portfolio better as well. But you'll get really good at watch list building. The problem is more traders are too interested in the market that's screaming higher. Oh, and by the way, let me tell you guys something. Why do I start to wind down around 11:30? Why do I want to stop at 11:30? I actually wind down at 11. So if I glanced over this too quickly, I know my sector secrets and futures folks know this, but we start to wind down as Europe winds down. Remember I said I don't want you gearing up at 11 o'clock? Look at what happened to the Dow. It doesn't mean that we're going to head lower for the rest of the day. It just means that there's probably some profit taking going on. A market is closing. You'll see the same thing at 4 a.m. if you're up. As Asia is closing, there might be some profit taking going on. As Europe is closing, and that leads then into the UK, there'll be some profit taking going on. Okay? So I hope that makes sense in terms of the window of time that I like to focus on. All right. And then when I'm looking for where I want to trade next, or if I'm looking to sort of at least understand where the rotation is going to be next, that's what I want to do. And I can look at a quarter, I can look at a 1 month, I can look at a month to date. And I just want to look at what is really moving higher and where the rotation may end up being. I think IGV could be very interesting. That's software. Early on, you might remember at the very onset of the chat, I was talking about software versus semis. I might be very interested in software. So that's going to be IGV or even FDN versus SMH. But if anything, somebody might say, Rog, that all sounds great, but what happened in terms of our position? The sync between the index sector stock. So now that we know this, and now that I've explained it to you guys, you can at least make an informed decision as to whether or not you're willing to take the risk when an individual stock is pulling back versus the broader index. All right. And I think that sync, and I'll own this. I was probably a little bit too confident and lax about that sync. So we ended up taking a little bit more heat. But remember, I did sort of even probably subconsciously accommodate for it, because if you'll notice, even in the moving lower in GM, we ended up with our conservative level hit. So if you were waiting for conservative and all you bought was conservative, you are fantastic this morning. You're doing a whole lot better. So yeah, keep that in mind, that if you look at it and say, hey, Rog, the sector is not syncing up with the stock. Let each other know, right? That's one of the great things about our Sector Secrets Mastery community and our Simpler Futures community. When I put all these rules out, you guys can help each other and say, okay, Rog, or even tell me, hey, Rog, the sync isn't there. Oh, right, thank you. Or you can tell each other, I really like this setup, but I don't have the sync. It's not quite synced up. And those are things you can give yourself the advantage of. All right. So that's what I've got here, gang. I hope it's been helpful. I'm going to start scanning the markets again, but since they're generally speaking up, not a whole lot to do today. I think we're pretty much positioned in what I want. Some of the limitations of what I will take are the proximity to earnings. If this were not earnings season, based on some of these pullbacks, we'd probably be in a lot more. But remember, gang, for every earnings binary play you take, which is a great big victory, remember, it's a very much kind of hit or miss type approach. What's going to be a much higher probability is not taking a trade through earnings, it's taking a trade to earnings. So we want to think about the preceding 6 to 4 weeks before the earnings date. That's the 642 we talk about. All right. That's that 642 we talk about. Is there a list of usual suspects to Timo, I'll talk about them in our live sessions, and I'll even send out occasionally updated watch lists. So yes, from time to time, I'll send you out a list. If you mean by watch list, things that I'm watching, yes, I will send them out from time to time. You got it. But since we're mostly focusing on longer term swings, that list doesn't change that often. And so I will be scanning, the sectors that I talked about here in the notes: financials, energies, jets. We're already in retail, ITB, XHB, construction, home builders, transports, industrials. And like, for example, here's a place where my hands are tied. I would love to take advantage of CAT, but I don't like the proximity to earnings. One, because we're close, the calls that we would buy have a higher implied volatility. So we're already paying up. Two, we're running out of time. So not only have I bought a more, relatively speaking, expensive option, I've got less time to see it do what I need it to do. Do we need to get out of T today? Yes. Yeah. So that's a good reminder. Yeah, if you're not already out of T, you need to get out of it. Correct. A lot of you might be out of it already. Yeah, a lot of you might be out of it already, which is fine. Okay. All right, gang, it's 11:30. Thank you as always. Some of you have been with me since 9 a.m. in Charts and Coffee. So I hope this 2.5 hours has changed your life, or at least been vaguely entertaining. If we have some more setups, I'll send them out. If there's some things on the watch list, I'll let you guys know. In the meanwhile, if you haven't checked out the video that I sent you guys yesterday in the Sector Secrets room, check it out. And folks in the live stream, thanks so much for your time and being with us. And like I said, this is a special event. Head on over to simpertrading.com/sector. And I'll see you guys then on Monday for those of you that want to go ahead and join. All right. Okay. Everyone be good to each other. I'll talk with you soon.